Yeah. So, very good afternoon, all. I am CA Balkrishan Gupta, the moderator of this webinar. We are delighted to welcome you all to this webinar, which is being organized by Continuing Professional Education Committee of ICI. Please block your calendar for the CP webinars on Wednesday and Fridays. It's my pleasure to be a moderator for the webinar on GST on imports and writ jurisdiction under tax matters with recent important judgments. In a short while, we will start this webinar. First, I would like to apprise you about the CP committee. The profession of chartered accountancy is growing leaps and bounds, and its phenomenal growth has brought the profession at the forefront. Today, our profession has acquired an indispensable position in the business and economy. ISA continuously aims at developing knowledge age so that the members stand out to the expectations of the society. To achieve this objective, the CP Committee of ICI has been continuously striving for perfection, integrity, and knowledge, which make the word chartered accountant synonymous with excellence in service. In this direction, the CP Committee has always been proactive in the emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CPE programs and providing adequate opportunities. Yes, the program for this evening is as follows. We have two sessions of 1 hour each, and the topics are first, the GST on imports. Second, writ jurisdiction under tax matters with recent important judgments. Our eminent speaker will talk about the above mentioned two emerging areas of professional interest. Now, I first would like to introduce our Vice Chairman CPE Committee, Central Council Member CA Vishnu Agarwal Sir. CA Vishnu Agarwal Sir is a Central Council Member of ICI for the term 2025 and 29. He currently serves as a Vice Chairman of the CPE Committee and the Direct Tax Committee of ICI. Additionally, he is an extreme member of several other key committees of ICI. With over 2 decades of experience, he specialized in income tax matters and also authored the book Landmark Judgments of Income Tax, Social Engagement and Continuity Involvement. Beyond his uh, professional commitments, CA Vishnu Agarwal sir is actively involved in social service and community initiatives. His professional acumen, leadership roles, and dedication to both the profession and society make him a respected figure in an accounting and taxation domain. Now, I would like us, sir, for his opening remarks. CA Vishnu Agarwal, sir, please.
Thank you, Balkrishna Gupta ji. Respected our own, the chairman of this particular committee, CP committee, in his absence, Satish Gupta ji. Today's speaker and my very good friend from Nasik, Chetan Bamji, and advocate Sri Ravi Gupta ji from Jaipur. Friends, I welcome all of you in this webinar. Today's very important subject we have taken under the GST and the income tax. Friends, every Wednesday and Friday, we are regularly doing from last 6 months. Every day from Wednesday and Friday, we are doing one good webinar. And India's top to top faculty we are inviting in this webinar. And I have seen from last 6 months that more than 10,000 chartered accountants are benefited in this particular webinar. Friends, the new finance bill is passed by the Lok Sabha and the Rajya Sabha, and you will be happy that under the Direct Tax Committee, I am also Vice Chairman of the Direct Tax Committee, and we have given close by close suggestion on the Finance Bill 2025, and the Select Committee has apprised that, and she has taken more than 90 suggestions from the ICI, and it is a happy pride moment for all of us. Friends, we have, under the Direct Tax Committee, we have released the guidance note on the tax audit in the before 15 days. So I request each one of you, our guidance note on the tax audit 44AB in the is our hosted on the website. So take the benefit of our guidance note of the tax audit. And in the last week also, we have released the checklist of the ITR 1 and ITR 4. So I also request each one of you take the maximum benefit of the checklist of the ITR 1 and ITR 4 and remaining form of ITR 2, 3, 5, 6 and 7. We are again releasing in the next week. Friends, the new format of the balance sheet for the non-corporate SEC, it is compulsory from 1/4/2025, and this particular audit which we are doing for the non-corporate SEC. The new format is the compulsory. So I request each one of you, please go through the new format of the financial for the non-corporate SEC. Friends, one more important changes we have done for the tax audit. If in any firm there are 4 partners and the per chartered accountant, the tax audit limit is the 60. So up to the law is under the Chartered Accountant Act, any one partner can do the sign on behalf of the another partner. But from 1/4/2026, it is changed that individual partner will sign each and every audit report. He cannot sign on behalf of the another partner. It means if there are 4 partners in the firm and 240 tax audit, then only one partner can sign 60 tax audit, not more than 60 audit report on behalf of another partner. Friends, so many initiative we are taking at the central council level, but today we have the limited time period also, and our speaker Chetan Bam from Nasik, he is eminent speaker on the GST, so I will not stand between you and the speaker. So I again request Balkrishna ji to introduce our today's speaker, Chetan Bamji. He is my very good friend and he is the master of the GST litigation. Thank you, friends.
Thank you, sir, for your kind words. Now, I would like to introduce our session one speaker, CA Chetan Bam, sir. He is a CA qualified in 2007 and has around 10 years of experience in the field of indirect taxes. He is also a cost accountant by qualification. He has worked with various firms as well as Indian businesses with VAT and GST as focus areas. His expertise covers manufacturing, real estate, infrastructure, traders, and jewelers. He is a faculty with the ICI on the Indian GST. He is a regular speaker, trainer at various forums like ICI, Tax, Practitioner Association, Educational Institutions, NASIN, and GST Department. He also has an experience in conducting training for various businesses. And over the last 2 years, he has addressed many professionals, businessmen on Indian GST. He is also co-author of the book published by Credi, GST or for real estate sector. Now, I request Chetan Bam sir to kindly address the audience. Thank you.
Thank you, Balkrishna ji, for such a nice introduction. I'm taking this. You are introducing me that to whom, that how I have to be, rather than not I am today. With this, thank you very much, CP Committee ICI, Chairman Satish sir, Vice Chairman Vishnu sir. He says he is a good friend, but he is a mentor and guide to all of us. With his all blessings, we are here today. Also thankful to the all coordinators and technical support team for your great efforts. You have logged in 15-20 minutes before. You have taken all the care that presentation will reach to people. Thank you, Balkishan ji, for your dedicated time. My co-speaker Ravi Gupta ji, and once again, welcome to all of you. I have given a topic for this webinar to address on the issues of imports under GST. I think technical time I'm sharing screen. Ravi sir, will you please confirm once it is, Balkishan sir, will you please confirm once it is moving ahead? Is it okay, Balkishan ji?
Yeah.
It's visible. It's visible.
Okay.
You can go ahead, sir.
Thank you. So this is the topic, imports under GST. So before we move to the topic, just we have to understand what are the implications that import transactions have to be considered for GST. As you know that the GST is applicable since 2017, and there are a lot of issues which we all are handling, including the yet we are awaiting for the tribunal to be formed. Good news is that one principal branch formation is completed and one of the judgment has been passed on WhatsApp, and all other things are moving ahead. So coming to the topic imports, so how the flow of the presentation will go ahead, just to elaborate before all of you, some important definitions, then what are the implications on import of goods under GST, then import of goods under FOB value and CIF value. This was the litigation was going on. We will also throw some focus on it. Then imports of services under GST, registration and ITC in case of import of goods and services, some of the important past prospects, notifications related to import, list of significant sections that we can consider while going through the presentations. So moving apart to my introduction slide. Now coming to that, what are the important definitions one has to consider while studying on import under GST? So first we will concentrate on import of goods. So what is defined? So basically, import is nothing but a bringing of goods into India from a place outside India. But the wordings are very good. That is with its grammatical variations and cognate expressions and means bringing goods into India from a place outside India. So this is a definition which is having a wide coverage, which is given a grammatical variations, cognate expression, etc., etc. So all in all, it is a very wide definition where the goods are coming to India from any place outside India. It would be import of goods. Now moving apart to this import of services means supply of any service where the supplier of services, here three things have to consider. That is, who is the service supplier, who is the recipient, and what would be the place of supply. So important part, what import of service is, a supplier of service outside India, recipient of services is located in India, and place of supply of services is in India. This is important to understand that the place of supply of service is in India, because in any way the taxes will come on the services which has been consumed on this law of land. So it is important to understand what is the three criteria for import of services. Now, third important definition, and many of us, those who are having a transaction with respect to services, export and import transactions, intermediary, this particular area one has to concentrate. And that definition is something about intermediary means a broker, an agent, or other person by whatever name called, who arranges or facilitates the supply of goods or services or both, or securities, or between two or more persons, but does not include, I'm not reading into all technical things there. So basically, intermediary is important person who has to consider by definition that who arranges and facilitates the supply of goods and service between the recipient and supplier. So this intermediary having a wide cognizance in case of importation of services. There was one particular circular also in this regard. Later on, it was been rescinded. That we will see in the further slide. So these are the important definitions one has to consider. Now, one of the important definition for the import transactions one has to consider is customs area means an area of custom station or warehouse and includes an area in which imported goods or export goods are ordinarily kept before clearance of customs authorities. So this is by Custom Act. So this is customs area. Location of the recipient of services means. So three definitions we have seen: import of goods, import of services, intermediary, and the customs area. Now, with one of the important is what is the location of the recipient of service. It is very well defined in the Act, and I have to go through the detail of it for the purpose of further slides. Where a supply is received at a place of business for which registration has been obtained, that place of business is particularly a recipient of location of the recipient of service. When it is received for a place other than place of business with registration, then that particular location or fixed establishment where the service is received. Then one person is having a more than one establishment, then it is giving a general analogy that most directly concerned with that particular establishment. In absence of all above transactions, places, or all above cases, the location of usual place of residence of the recipient. So in case of importation of service, sometimes the question comes about place of supply, then location of the place of residence of that person will also come into picture. Then location of the supplier of services means, if we go to the location of the recipient of the services definition, all in all, the analogy of the location of the supplier of the services is also been carried out like this. So from the place of registration, from the fixed establishment, which is most directly, or if not from the fixed establishment or registered place, then most directly concerned with that person, and in all other places, place of residence of the supplier. So location of the supplier of service for the recipient of the service and supplier of service, all in all, analogy for the location is same. Now we'll move to the details of it. What is the import of goods and what they are saying. So if we see the Article 269A, when the GST came into picture, one particular aspect they have written that import transaction would be treated as interstate supply. And if it would be an interstate supply, obviously IGST will come into picture and the central government will have that right to collect the taxes. So in case of import of goods, section 210 of the IGST Act, bringing goods into India from a place out of India as per the definition. And the levy comes like this. What is the basic custom duty? What is the IGST on that product? What is the compensations? And this all machinery is being used by the custom department. How it is, how the calculation will come, we'll see in further slide. In case of services, import of services, we have seen that it is outside India coming to India, and place of supply of service is in India. And the levy tax is reverse charge applicability on the person who is recipient. Another aspect of OIDI services, unregistered person, payable by supplier, appointed person. This particular OIDI transaction having the specified category of transactions with the law sections, provisions, rules, along with some circulars, some specified things are there that we will see later. So what is OIDI? This is the online information and database access retrieval services. So in case of imported, we have to understand that the central government has given a power to collect the taxes in respect of import of goods and services by way of an IGST. How the transaction will move to particular state and the consumption will be there in the particular state, then that state will get some kind of revenue that has been taken care by the government according to their account settlement. That is about IGST to the respective state GST. Now, IGST on imported goods, addition of duty of customs, that is also important, and that we have to consider that what is basically the mechanism they have followed and how that cross-border transactions are getting implied. Supply of goods imported into the territory of India till they cross the custom frontiers of India is doomed to be an interstate supply. IGST on goods imported into India is levied and collected in accordance with the provisions of Custom Tariff Act. So IGST would be collected on the import on the goods, and it is with the Customs Tariff Act 1975, and the machinery of custom law is being used. So when the goods are imported on the dock or any particular port, that goods, when it is getting released from the customs by filing bill of entry for consumption, then IGST is to be paid by the importer, and that IGST is to be deposited to government account. Later on, that IGST, if it belongs to some states, say for example, importer say located in Rajasthan, the state tax component of that such IGST, which accrues to state of Rajasthan, will be settled between the central government and state government of Rajasthan with their account settlement that we have seen in case of IGST vis-a-vis state GST. Now, point when IGST is levied on imported goods. Now, the question will come. So, as we have seen that IGST is applicable on the import of goods, then at what point of time and how it is to be confirmed. Now, IGST on goods imported, levied and collected at point where custom duties are levied, and the importation of goods gets complete. That is when the goods become the part of mass of goods within the country. So it is crossing the custom frontiers and custom barriers, and the importer is filing a bill of entry. So there is a document which has been created that is called as bill of entry, means one particular document which is certifying that these goods have the goods have crossed the custom frontiers and entering into India for the home consumption. So once that bill of entry is being passed, so custom duties and IGST has to be paid, and that is the point where IGST levy will come into picture. Now, taxable value, how to define? So in case of import, how the value will come for the IGST. So in general, what we have seen in all of our CA brothers, those who have seen the customs in their CA final syllabus, maybe today or maybe in past. So general aspect is that what is the value of goods? That is value determined under section 14 of Customs Act, basic customs duty, any other sum levied under any law for the tying in force. Some other duties are also there like anti-dumping duty, safeguard duty. Those all are value added, and that entire value becomes the valuation aspect for the levy of IGST. So example we will see, and then we'll go again back to side. So what is that? Say assessable value of the one particular product is 100, basic customs duty at 10%. So 100 plus 10, education says on that custom duty 3%. So your total value for integrated tax, that is value before IGST, comes to 110.30. So integrated tax, say assume at 18% of that product, so it comes to 19.85. So value for compensation says will be again 110.30, and compensation says for example that product is liable for cess, so 15% compensation cess is there. So total duty would be around this 46.70, that includes of custom duty, integrated tax as well as compensation cess. So IGST component will come for this transaction as 46.70. So what is happening here? When the goods have been imported, one has to consider that whatever custom duties or some other additional duties like anti-dumping duty, safeguard duty, or some other liabilities which are under law for time being enforced, those have to be considered as the value of the product. After adding those all values to the product, then the IGST component will come. Now, what is happening here and what we as a practitioners or GST consultants have to take care. I have seen a certain cases where while making an accounting, now the things are easy because the GSTR 2B is giving the values of IGST in GSTR 2B reports. But in initial days of GST, it was happening. Again, in some cases, books of accounts where typically credit availment is not done according to 2B at the same time because they are availing credit later on or some other aspect of quality control or what we have to take care as a consultant or GST practitioners, we have to verify the bill of entry where the values have been defined on particular aspect of that transactions like value, basic custom duty, education says, any other extra duty, then IGST. I have seen some cases where accountant has made this mischief or maybe by way of you can say a filing data entry, wrong data entry, they have consolidated the entire value in custom duty in case of all transactions where IGST is also paid. Sometimes they have validated all custom duty and all other duties in IGST transaction, and the entire credit is being claimed by the parties, and they have suffered this particular problem while the audit or assessment were going on. Nowadays, the things are very settled, but still, as a consultant, we have to take care that we have to verify the bill of entry where these all items, what is available in this example, in this slide, that is validated on that bill of entry document, and we can verify with the books of accounts. So if it is going right or wrong, and obviously then credit eligibility and all other aspect as per the law provisions. Now, it is important to understand the applicability of IGST on goods supplied while being deposited in custom bonded warehouses. Section 38 of Custom Tariff Act. Now, what is this particular transaction is and what transaction they are explaining here in this case that we have to consider in a different way. So, there are something which is some transactions which is called as that liability of transfer of ownership of such goods to another person is happening on the document it is happening on the documents and remain deposited in the warehouse only, and the warehouse goods per person before clearance of consumption is been not been supplied to somebody or not been sold to directly by filing a bill of entry consumption, and it has been supplied on the document itself. So transfer of title of goods is been transferred to one person by the document itself, and the bill of entry is been passed by that person who is taking a consumption of those goods. So in this case, GST is not leviable because goods which are deposited in custom bonded warehouses are sold before the clearance, and same is leviable to X bond bill of entry is filed for clearance such warehouse consumption, and the person who is filing that consumption entry, he would be the person who is going to pay IGST. Now here we have to understand that the import transaction is particularly done by X person who is importing such goods, and it has been sold, those goods are sold to some people who are actually not the importer, but they are filing bill of entry for consumption. So in such case, the first Mr. X who is doing a transaction, basically that person is not supplying the goods or services as per GST, particularly in goods mechanism. Now, value of imported goods, IGST warehouse, in case of warehouse goods, what would be the mechanism? Then that particular transaction is with true aspect, whichever is higher, that transaction value or value determined as we have seen in the last slide. So in case of warehouse goods, when it is supply is directly happening, one has to understand the transaction value which is happening between the supplier and the recipient, or value determined as per the custom tax, as per the all applicable charges and the IGST levied on it, whichever comes higher, that value to be considered for the bill of entry consumption of the person who is filing a bill of entry for consumption. The taxability of IC sale. So whatever I was talking in before, that furtherance of that particular talk we will carry here. Now let's understand what is IC sale. So basically this is a common trade practice where original importer sells the goods to third person before those goods are taken for own consumption. Or you can say that custom clearance is not been completed. The goods are warehoused at the custom authorities premises only, and that goods has been directly sold to some party or supplied to some party without giving a bill of entry consumption. So in such case, that particular transaction is called as IC sale. Now, whether IC sale are considered as a supply for the supplier or it is out of GST purview or what? So in such case, when we go to section 7 of the CGST Act, read with the schedule 3, where clause 8A is defining something which says that supply of warehouse goods to any person before clearance for home consumption. 8B, supply of goods by a consignee to other person by endorsement of documents of title of the goods after goods have been dispatched from port of origin located outside India, but before clearance of home consumption. If this particular two transactions or two type of transactions are happening, in such case, supplier who is supplying the goods, that particular transaction is basically a transaction which is not under the purview of GST for the supplier per se, because Schedule 3 deal with the transactions where the transactions are not applicable under GST, or you can say things which are not covered under GST. So this particular high seas sale is covered under this. But note my words, here one has to take care that this particular high seas sale transactions have certain logics for the credit reversal mechanism when you are supplying such goods under the custom bonded warehouses before filing bill of entry for consumption. Such transactions are out of purview of GST for you as a supplier. However, it would be reported in your books of account. In generally, it is on GST supply transaction. So there is a certain linkage of ITC reversal with these transactions. If you came across such kind of transaction, kindly go to the ITC reversal provisions, which we also discuss in the latter slides. Now, taxability of IC sale and what will happen. Important part to express before you, not going into detailed reading of this slide. Now, particularly one amendment is proposed by Finance Act 2025 dated 29th March 2025. The amendment of Schedule 3, and there are certain explanations and paras have been added where the supply of goods warehoused in special economic zone, or you can say some other specified free trade warehouse zone, domestic tariff area zone, these kind of particular zones are there for the economical aspect. From that premises, if the direct supply will happen, what would be the scenario? Whether that would be again out-to-out transaction for the GST in Schedule 3, that would not be considered for the supply per se. These explanations have been added and these clauses have been added to Schedule 3 Clause 8. So one has to go into details if such kind of transactions before them. So one particular transaction, I'm going back to previous slide, one has to understand. If again we'll go with the example, suppose Mr. X importing some goods from Malaysia, coming to the Mumbai port, before filing a bill of entry for consumption, that person, Mr. X, is selling those goods to Mr. Y by documentation and transfer of title of goods on the document itself. And then Mr. X, say that person belongs to Rajkot, Gujarat, is filing bill of entry for consumption. Then Mr. X is having this transaction, which is a supply of goods, but that is out of purview of GST because Schedule 8 Schedule 3 Clause 8 is specified this transaction which is out of purview of GST. But then Mr. Y, who is importing such goods, particularly for GST prospect, because he is not a direct importer, but he is filing bill of entry for consumption, he would be liable to pay IGST on that import transaction, and obviously all other further implications he has to carry it in his books of account. So if we have to take care that this kind of transaction for the supplier is having a different implication, for the recipient it is having a different implication. Now, third country shipments. This is also important. So what is third country shipment? Sometimes in general language, it is called as triangular trade. Or you can say that goods have been sold by a person who is an Indian origin person, but he is selling or purchasing some goods and selling and purchasing to some other country without touching the India or without crossing the Indian custom frontiers. So what is happening? So let's say an example, the person who is from Chennai is importing some goods from China and selling those goods directly through the documentation and all other aspect to Singapore. So goods have been brought from the China, not coming to India by custom frontier or by any transportation module, directly going through the China and selling it to the Singapore. In such case, for that person, Mr. A, who is from Chennai, this transaction is called as out-to-out transaction. So these are not coming in India and directly going outside India. So basically, this kind of transactions earlier, when 1st July 2017 GST law came into picture, there was no clarity on this transaction. So then one particular advance ruling came by the Chennai authorities, and then this transaction got clarified. So later on, government understood that that particular transaction which is happening of supply of goods and service of supply of goods and receipt of goods to some other country, not coming to India. How can we levy some tax on it because that is not coming to Indian land? Hence, that particular again transaction has been defined as neither supply of goods or service by Schedule 3, Paragraph 7, and that has been amended from the 2008 GST Amendment Act. So one has to take care that out-to-out transactions for such kind of sale where the supply of goods are coming from X country and the receipt of goods are coming to X country and supply is happening to Y country, but the person who is a taxable registered person is in India, that transaction is called as out-to-out transaction in a triangular trade. No GST liability. Such transaction is out of purview of GST by para 7 of the Schedule 3 and not coming. No GST implication arising on it, neither on import of this, neither on export of it. Now the question is, what would be the ITC concerns in this? Again, one has to take care about the ITC reversal provision because that particular supply again would be a non-GST supply, as we reported some other non-GST supply like petrol, diesel, liquor, if the same business line of actions are there. Now, taxability of goods imported by SEZ. Now, goods imported by SEZ developer is exempted from the whole IGST leviable and the notification is there. So that taxability of goods imported by SEZ is not having IGST implications. Now, EOU, it is also important to understand that what EOU is doing. So EOUs are basically unit, and by large definition is export oriented undertakings. They are importing some goods which they are consuming for their own productions or other process, and then those goods are basically inbound in the goods which are manufactured and going to get export out of India. So those EOUs are usually importing some goods in India and they are having certain exemptions for the custom duties, IGST, GST compensation cess, and all others. There were certain dates where these particular amendments were carried out for the exemptions, and later on that dates have been carried for further number of years. Now, currently in such scenario, there is one particular amendment which is not specifically covered here, but then I have to express for the particular EOU criteria because it is related to the import transaction. Now, what is happening? Say, for example, EOU is a manufacturer in Nasik, and those who EOUs manufacturing in Nasik and exporting those goods out of India. Now, while importing some raw material, they are taking a benefit of advance authorization. Say an example, advance authorizations where duty-free imports have been happened. They are not paying custom duty. Similarly, they are not paying IGST. They are not paying cess, presuming the cess is applicable on that product. In such case, if they are not paying any import duties, IGST, GST, whether they would be eligible to get a refund in refund categories of with payment of tax, or whether they would be eligible to get a refund by without payment of category, that is ITC accumulated in books of account. Although they are not getting any GST in this particular import transaction, but there are certain local transactions where GST is accumulated. So in case of import transactions, Rule 9610 was amended in November 2024, and the department has deleted that para where they says that any person who is importing any goods for the custom duties were not been paid as a duty-free imports or some concessions are given, still they go for with payment of tax refund. However, there is one explanation added which says that in such cases, the people who are taking a benefit of custom duties only, they can avail the with payment of tax refund. However, when you are importing, you have to pay IGST and cess, etc. if it is applicable. So if any of the concession in import, rather custom duty, IGST, GST, cess, or whatever it may be, if any of the concession has been availed, and if you are an importer, along with that, as a EOU, you are again exporter. In that export category, you would not be in position to claim a refund of with payment of tax option. You have to go for without payment of tax option. And if you are taking a benefit of only custom duty and IGST and GST cess paid in the imports, then as a EOU, again exports are happening, you are eligible to claim a with payment of tax option. However, directly not related to this, but then Rule 9610 is having this notification 52/2003 linkage along with the 100% EOB criteria. Hence, I have touched upon that aspect. Now, import as baggage. Passenger baggage are exempted from IGST as well as compensation cess because it's for personal use. Obviously, the logic is it is not in the course of furtherance of business. The basic custom duty 35% rate is applicable. Education cess is applicable. If the excess allowed categories of baggage values have been crossed, obviously IGST is also coming into picture. We have seen certain transactions where people have made a mischief and then department has charged certain taxes on it, including some mobile products. the import goods on FOB value and CIF value. This is also to be important. So right now, what we have considered till time, what we have completed this time, so we have seen the definitions of imports of goods, import of services, intermediary, and all others. Further, we have seen that what is the taxability stage or where the levy of IGST is coming while the goods have been imported. Now, if the goods have been sold before the consumption, then what would be the implication? If the goods have been sold in international trade, out-to-out transactions of Indian territory, what would be the implications? Similarly, we have seen that what would be the implication on EOU for 100% imports with the concessional rates. Also, we have seen the SEZ impacts and all other. Now we'll go to the one particular aspect where the import of goods on FOB value and CIF value, this particular consideration is there. And again, it is having some linkage of the reverse charge notification of IGST, and that is 10/2017, where the IGST, integrated tax rate notifications, was giving some taxability transactions where the import RCMs were applicable. Now, first we'll understand what is meaning of FOB. So FOB is basically free on board, also known as freight on board, a term commonly used for international shipping. What is basically here? It is that goods delivery at the seller's expense. So if the seller is taking an expenses for all the goods which have been delivered, and all expenditure also been considered by the seller only, this is FOB. So responsibility of shipping of that buyer as soon as the goods leave the specified point. So responsibility for shipping is that of the buyer on one particular point, till that point, the supplier is taking a care that it would be goods included delivery at the seller expenses. And after that point, buyer's responsibility is there. Now, why meaning of FOB and CIF is required to understand, that we will see in further slide. Now, what is CIF? That is Cost, Insurance and Freight, International Shipping Agreement, which represent the charges paid by seller to cover the cost. Insurance and freight of the buyer's order while cargo is in transit. So cost, insurance, freight only applies to goods transported via waterway, sea or ocean. So this is CIF. Now, what is the importance of FOB and CIF? So freight on board and CIF, that is cost, insurance, freight, who will bear that cost and who will not, that is having some implications for IGST transaction. So what was happened that, so until the goods delivered to the buyer's destination, seller bears the cost, that is loss of damage or product, because seller has taken that all cost, insurance, freight, everything is my responsibility. So after the custom frontiers, the goods have been handed over to the buyer. Buyer will take care of this. So that particular point where entire cost is being borne by the seller, that is CIF values. Now, what is important for us to understand in import transactions? So there are certain ocean freight charges for the import of goods. So when the goods are imported on FOB basis, say for example, shipping line located outside India, GST is levied under RCM notification 10/2017. Accordingly, import is liable to pay under RCM. I'm reading the entire slide for all of us, and then I'll explain. If shipping line located in India, shipping line will charge the GST on forward charge invoice by them. Then goods imported on CIF basis, that where entire cost, insurance, freight is being considered by that seller. Say for example, I am importing these goods from UK, and it is a deal where CIF basis deal has been defined between me as an importer and that particular UK exporter, and he is taking all cost on his shoulder about cost, insurance and freight. So he is giving me on CIF basis. So in that case, entire value of the charges, including freight charges, have been considered by that seller while designing a selling price, and that is also included in my import value of the goods. Hence, indirectly, that IGST is paid on my import goods. So there was a famous case of Mohit Minerals won with the Gujarat High Court. Later on, the judgment came that this particular implication of this particular entry number 10 of 10/2017 integrated tax rate, which says that you cannot ask again GST on particular value where the GST is already paid while importing the goods. So when CIF basis transaction is happening, you cannot charge once against GST. This was the crux of this judgment. So later on, government came up with the clarification, and from 1st October 2023, this entry was omitted from the notification itself. So for the understanding and the simplicity, I will express it once again. See, if I am an importer importing some goods where my transaction between supplier and me has been settled to the mechanism of FOB. So freight on board means that supplier has given that particular point up to which the delivery belongs to him, and later on delivery belongs to me. So shipping line located outside India, one particular freight service provider was there to whom I am paying the taxes. If that particular service provider is out of India and those freight charges are debited to my books of account, as an importer, I have to pay import RCM service because the service is coming outside India to me by the shipping line located outside India. Now, suppose shipping line is located in India and who is giving this freight service to me, I am paying certain charges. Obviously, this is a transaction between X registered person to me as a registered person in India. Forward charge will apply, that shipping line will charge an invoice to me. But if I am importing these goods from the UK where CIF category transaction has been decided between us, in such case, whatever total value will come in my bill of entry, I will pay the IGST on that bill of entry. And earlier when it was saying something that the CIF charges are to be calculated in different mechanism and I have to pay again RCM on it. Now that has been omitted from 1st October 2023 in the notification itself and by after the reference of Gujarat High Court judgment of Mohit Minerals. So one has to consider this ocean freight transactions for import of goods. Now coming to this import of services. Now taxability of import of services, what is that? That we have seen that what is import of services and what is the definition of this. But then important part is that in case of section 7B, what I have to read for all of you, entirely what is this? Supply under section 7 of CGST Act, clause B thereof, include services imported for a consideration even if the import is not in the course or furtherance of business. Still it is a supply. So that is the only one transaction where I am saying that transaction which is not in the course or furtherance of business, still it constitutes as a supply in GST. That is import of services by me. Say for example, I am constructing my bungalow and appointing an architect, and that architect belongs to, say for example, Italy, and taking his services for designing and everything. I am paying something to him. That would be a supply. Import of service will come into picture. I have to discharge the tax, how it is, what kind of mechanism, that all questions are there that we will see later. So this particular transaction, because of that bungalow construction not in the course of furtherance of business, I cannot say that this import of service of architect by me is not a supply. This has been specifically defined. And some other aspect what we have considered, that importation of services, what is something that I am repeating for all of us, that import of service means a supplier outside India, person who is recipient in India, and place of supply of services in India. If these three criteria or three limbs are getting satisfied, import of service will come into picture. Now, significance of consideration of business test, what is happening? So in case of import of service, consideration necessarily required, then only business test will not be considered. And otherwise, you can say business test is not required, consideration is there, necessarily consideration is there, import of service. But import of service by a person from located from his establishment outside India, consideration is not required, business test is necessarily required. What is this? Basically intermediary transaction. So these two important aspects we have to consider for import of service where consideration is paid. And in case of import of service, when it is consideration is paid, it is course of furtherance business that we don't have to take care. In case of import of service from a related person or from his establishment outside India, even if we are not paying a consideration, business test is required. There is a business relationship between two persons without consideration. Supply is coming into picture and one has to pay IGST on import of such transactions. Now, meaning of import of service that we have seen: supplier outside India, recipient is in India, place of supply of service in India. Now, this particular chart, why I am repeating it? Because there is a transaction where we have to understand that whether the import of service getting qualified and then the GST implication will come. So by this example, we understand. So what is happening? First example, location of the supplier is from London. Location of the recipient is Delhi. Place of supply is Delhi. Whether it is qualified as import of service, answer is yes, because location of the supplier outside India, that is London. Location of the recipient inside India, that is Delhi. Place of the supply is Delhi. Either it is qualified, answer is yes, it is import of service. Transaction will definitely tantamount to import IGST or reverse charge IGST on import of services under reverse charge. Now, second example, location of the supplier is London. Location of the recipient is Paris. Place of supply is Paris. Obviously, transaction not belongs to India, so it's not an import. But sometimes this transaction comes in books of account. because the entities are having the cross-border establishments and they are taking this transaction in their Indian books of account. And officers, while doing audit or assessment, taking this charge. So one has to go for this particular litmus test. If these three transactions, these three steps have been verified, import is happening, then only RCM will come, otherwise not. Then location of the supplier, Delhi. Location of the recipient, Paris, but the place of supply is Delhi. So recipient is in Paris, supplier is in Delhi, but place of supply is Delhi. Import is not, basically it is export. Then a person who is the location of the supplier, say from London, location of the recipient Delhi, place of supply London, whether it is qualified as a service. No, you will ask me, is there any kind of transaction like this? So I have one peculiar case where we have gone for a department audit. I will express before you. That particular entity was an importer and exporter for the fruits. They are based out of Nasik. So they were exporting some fruits to Italy and all other European countries. And one fine day, they got some dispute between the buyers. So they have lost some court cases in the Italy court. And they have appointed one particular lawyer who was representing their matters in the Italy court. In such scenario, the fees paid to those lawyers were debited to profit and loss account. We gone to the department audit and department audit personnel asked for that particular transaction to be considered as import of service and why RCM is not paid on it. But when we were submitting something, he was not agreeing on that part and he gone for the audit para and later on SCN was issued. So while adjudicating this matter at SCN authorities, we have submitted certain details. Later on, we understood the entire chain of action and some documentations were came to our rescue. What was that? That particular exporter of the fruits, they were exporting goods from our Nasik premises to the Italy. And that particular dispute happened in the Italy is to be represented at Italy court because their agreement was such that in case of dispute, the Italy court jurisdiction would be considered. That was an agreement. So later on, when the court has later on when the case was launched or suit was filed, that particular fellow who was the lawyer from Italy, then that person is giving service to we as the establishment in Nasik. However, he was performing all advocacy duties at Italy High Court. So when we have explained that the place of supply of this particular advocacy service is basically Italy, this is not falling under the importation definition. Hence, this transaction per se not import itself. Hence, IGST would not come. At adjudication level, our case got dropped. So we have to consider this litmus test for all these transactions, and then we have to decide whether it is import of transaction or not. So one has to consider these kind of examples and go into documentation prospect. It would be easy to understand whether it is import because the importation of service has specifically been taken care by the departmental audit authorities for the purpose of reverse charge liabilities. Now, who would pay the import tax on importations? Obviously, the importers. In case of shipping lines, obviously shipping lines belongs to India. They will charge forward mechanism. If it is outside India, we will pay as an importer. Now, importation of OIDR services and what is OIDR services that we have to consider. So, in case of importation of OIDR services by a non-taxable online recipient, supplier of OIDR services is liable to pay IGST. In case of importation of notified services through e-commerce operator, e-commerce is liable to pay IGST. What is basically this OIDR? So, online information database access and retrieval. These services have been specified by way of certain categories where the suppliers are having their establishment outside India, but they are giving certain services to the people who are of Indian origin. So they are not basically established themselves in India. Sometimes they are having their channel partners or their establishment in India. Sometimes they have appointed the authorized representative here. In such case, such services are moving through outside India to India. Still, supplier is liable to pay taxes and they have to be registered under GST and they have to pay IGST on such transactions. So these transactions are usually happening through the medium of internet and online transactions are happening. So what includes such OIDR services? So providing a cloud services, provision of ebooks, movie, music software, online supplies of digital content, digital data storage, online gaming, advertising services on the internet, providing data or information on retrieval services to any person in electronic form through a computer network, or all other categories of work services which includes in this category. This is a wide area where OIDR come into picture. In order to determine whether particular service is OIDI, so two tests have been conducted. Services whose delivery is mediated by information or technology over the internet or electronic network, plus services are automated and impossible to ensure in the absence of information technology. So there is a need of information technology or internet mechanism. And then if these two tests are getting satisfied, then that service would be OIDI services. So one has to take care if this is happening. Who will be responsible paying a tax? Important to understand. Cases where supplier of services is located outside India and the recipient is located in India. So if case one, recipient is a business entity, registered person, reverse charge mechanism would get triggered. Say if I am a registered person taking, say for example, advertising services from Facebook, presuming Facebook is not having any Indian establishment and giving an invoice from me, the US headquarters. In such case, as a business entity, I am taking that service from Facebook. So this would be a reverse charge liability to me as importation of service. But if recipient is in India as individual consumer, so Facebook is also giving some services to the individual person, and that supplier of services located in a non-taxable territory shall be the person liable for paying integrated tax on such supply of services. So problem is here, how government will identify such transaction that certain taxable people, certain persons who are giving OIDI services in India belongs to non-taxable territory, but supplying such services in India. So government is having there some certain cross checks mechanism. However, there are certain challenges. So in such cases, that particular entities are required to take a registration in India. They have appointed a certain authorized representative and they are taking a registration into it. Now, in case of intermediary located outside India, what is intermediary? We have seen that again, I will explain in short, a person who facilitates the transaction between the supplier and recipient. And in what is happening in case of intermediary, those who are merely an intermediary, and whether they are facilitator or whether they are actually an importer of that particular goods or services, those questions are still there. In such scenario, to overcome on this aspect, there was one particular circular which was issued, circular number 107 in 2019. And after 6-7 months, again that circular is rescinded by 127. But if one has to understand that what would be the intermediary located outside India challenge, intermediary services would be having the implication of GST, particularly on information technology and services. One has to go this one right. One has to go to this circular and read for the understanding. However, this circular has been rescinded, so one cannot take a stand on it. But in case of intermediary, if the transaction falls under the category of intermediary, this would not be an import and IGST will not come. However, it is very hard to establish that scenario that whether it is actually intermediary or it is a different transaction between two recipient and import is considered. So intermediary is one particular area where still litigations are there. One has to be very careful in documentation between the establishment in India or establishment belongs to outside India and intermediary services. If you are taking a care of it, if you are falling into this particular category, you have to take care of it. The liabilities and all other aspects are on your shoulder. Then what are the provisions of which are enabling OIDI services to locate surrender to comply with the responsibility of GST law? So section form registration section is there. REG 10 form required. Then overseas supplier as a representative in India for any purpose. Then such person as a representative in India shall get registered and pay GST. Some OIDI services are based not out of India, but they have appointed some authorized representative. That appointed person can apply for GST and he can discharge such liabilities on behalf of them. This is there. Then registration ITC in case of the import of transactions and all, reverse charge position is there. Then registration mandates provided for the compulsory registration of 24, but not for import of goods. It is mandatory to quote GSTN number on bill of entry by all the importers if the goods have been consumed for the business, imported for the consumption of business. Then registration section 23 is specifically giving exemption for the exempted products. So if you are importing something which is of exempt nature, you don't have to take registration. Your PAN document will suffice the purpose. Then in case of importation of service, if you are importing something which is you can say a importation of service by that clause where it has been saying that importation of service even if it is not in the course or furtherance of business, but still it is an importation of service and constitute as a supply. So section 24 is there for the rescue of government, which says that if you are falling under certain transactions which are applicable for reverse charge, as a recipient of that transactions, you are liable to discharge the duties and you have to compulsory opt for the registration. So that mandate is there. Then input tax credit of all these transactions is eligible subject to section 16 and 17, all other block credit provisions. If the ITC of that transaction is allowed to you, you can take a credit. If similarly in compensation says credit is allowed to you, you can avail that. In case of basic custom duty such paid on the imported goods, that is basically a cost to you. No credit allowed to those taxes paid under customs. Then importation of services, again the same mechanism, 16, 17 section, if is not barring to you or not giving a particular disallowance and block credit, then credit is allowed to you. So with this, once again, thank you for giving this opportunity. Hello,
Yeah, thank you, sir.
Balkishan
you
ji?
for-
Yeah,
Yeah.
yeah. I think, are you there?
Yes.
So just give me 2 minutes to again give a summary of all this. So what we have seen that import of transactions having certain implications, although a very small chapter of GST, the import of transactions having two category of import of goods, import of services. In case of import of goods, custom machineries have been used. You have to pay IGST while paying and while importing a goods for bill of entry for consumption. If those documents have been not been filed, you are selling or supplying such goods only by transfer of title of document. In such case, you would not be in the position to treat it as a supply in books of account because Schedule 3 specifically says that these are the transactions which are out GST purpose for your books of account. So particularly transactions which are inter-country transactions, you are based out of India, but goods are not coming in India, just supplying from X country to Y country, out transactions, not in the purview of GST. High seas sales we have considered. Importation of services, how the importation of services have been defined, that has been considered. Place of supply is having very important role in importation of services. RCM transactions are coming into picture and all other categories we have seen. Similarly, we have seen that what would be the value of the aspect for the calculations of import to IGST values and all other provisions and applicable machineries of the law. These all small chapters of importation of goods or importation of service we have seen. Due to time possibility, I think I am running at 5. I may have gone at some slides very faster or not touch upon the entire aspect, but I have tried to throw some focus on it where you can go through the details and you can understand for certain sections, notifications or circulars. Within once again, thank you for ICI CPA committee for giving this opportunity. Thank you very much, Vishnu sir, for considering me for this session. Thank you, Balkishan ji, for your nice time with me and all other participants for your patience listening. To the best of my knowledge, I have tried to give the things. However, I will again repeat it. Opinions are like wristwatches. Everybody shows different time. Everybody believes it's right. So one has to take care of his own study. And thank you once again to all of you. Over to you, Balkishan ji.
Thank you, sir,
Thank you
for
so
such an
much.
insightful and enriching session. Now we begin the question and answer session, and I request the audience to kindly raise their questions in the chat itself. And we have received some of the questions, uh, like from Ahmedabad. Sir Devam sir, they asked that an agent located in India and a customer is in America, consideration received in foreign exchange, and which type of tax is to be paid, that I have IGST in under section 7.5 or CGST under 8.2.
So basically what he is asking, I'll repeat for all of us. So probably he is asking for a transaction which is in the nature like this, that one particular supplier belongs to US. He has appointed one agent who is based out of Ahmedabad, and that Ahmedabad agent is giving the service to that particular US based entity for the source consumptions, that he is giving some buyers in India and he is getting some commission out of it. If I am presuming this, is it right? If that particular fellow can reply to you.
Uh, Not yet, sir. Yeah.
Okay. Anyways, presuming this is the question basically. So in such case, that particular fellow is basically a service who is giving from India to outside India to the foreign entity. But the place of supply of service is in India. And sometimes it belongs to Gujarat state, sometimes it belongs to states other than Gujarat. In such scenario, in my opinion, it is an export of service, but not eligible for the LUT aspect. Hence, IGST is to be discharged. Even if it is delivered in Ahmedabad, still I will pay IGST. Even if it is delivered in, say for example, Indore, still I will pay IGST. However, this is my understanding.
So the next question is, sir, in the case of inter-country transfers, how the dealer account for proceeds and payments?
Sorry.
In the case of inter-country transfers, how the dealer account for proceeds and payments?
So for his books of account, it is as good as a transaction which is out of purview of GST. So like say for example, I will speak in the prospect of builder developer. A builder developer constructing a premises taxable under GST if sold before completion. And same builder developer is selling some lands and buying some lands. Say for example, purchasing land and selling land. So those purchase of land and sale of land books of is coming to his books of account as a transaction which is out of purview of GST. Similarly, in case of intercountry transactions, the purchase and sale will be recorded. However, it would be accounted in books of account. Profit would be realized in books of account, but it would be out of purview of GST.
Great. So the last question, sir. IGST on services for personal use. How would an unregistered person would pay tax under RCM?
IGST on services for?
IGST on services for personal use. How would an unregistered person would pay tax under RCM?
Basically, that person is falling under the section 24 compulsory registration criteria. So if you are importing some service, even it is not in the course of furtherance of business, as I said, for my bungalow construction, I am appointing an architect and then I am paying certain fees to him for my bungalow construction. I have to compulsory get registered and I have to pay that import RCM. This is what the law is saying. However, what is happening actually and how department is tracking such transaction is a big question.
Right. So, and last, thank you, sir, for delivering such an insightful and enriching session on GST on imports. Your valuable knowledge, practical insight, and clear explanation have truly enhanced our understanding of this complex area of GST. Thank you, sir. Thank you once again.
Thank you, sir.
Now, we start our second session, and I would like to introduce, right, sir.
Yes, Balkishan, just a minute.
Yes.
Thank you once again, all of you. Ravi, sir, some other commitment at 5:30, I would not be positioned to attend your lecture. It is my misfortune. Definitely would like to connect you once again. Congratulations.
No problem, sir.
for your session.
I was fortunate that I had your session, sir. It was really wonderful deliberation. Thank you.
Thank you, sir. Thank you. So,
Yeah.
goodbye to all of you.
Thank you, sir. Now, I would like to introduce our session 2 speaker, CA Advocate Ravi Gupta, sir, from Jaipur. He is a qualified FCA, CS, and lawyer, having experience of more than 12 years in direct taxation litigation, and has been practicing as a lawyer specifically in indirect taxation and providing litigation services for cases before all appropriate forums, including Supreme Court, High Court, CSTAT, appellate authorities, etc. He has argued many landmark cases of GST before the Constitutional Court, which led to significant importance in involving the GST law. He is a regular faculty at NASIM. He has spoken at various tax and trade associations, news channels, and various branches of ICI, ICSI, and ICMI. He is also a regular writer of GST articles, which are published across India. Right. So I would like to invite our CA Ravi Gupta, sir, for addressing the audience. Sir, please.
Dear participants, first of all, I am thankful to CP Committee of ICI, the respected Chairman Sir C. Satish Kumar Gupta ji, Vice Chairman Sir C. A. Vishnu Kumar Agarwal ji, C. A. Balkrishna Gupta ji, moderator of the program, who is from my own city, Jaipur, and all the curious participants. I feel really happy today that I am going to deliver on a very, very important and interesting topic, writ jurisdiction under taxation law and recent judgments by Honorable Supreme Court and Honorable various High Courts of India. Being a chartered accountant, we all are aware about the writ jurisdiction, writ petitions. We have heard that in this case, writ was filed, this was the outcome of the writ, but we are not very much aware that what actually writ is, what time it should be filed, where it can be filed, in what cases it can be filed, and we can get the relief. What are the matters, what are the situations when the courts allow the writ petitions? How it can be strictized, that in which case we should go for the writ petition, or we should exhaust the alternate remedy available like appeal, adjudication, or etc. Where we can go, when we can go, how we can go, these all aspects we are trying to cover. We will deliberate in next 1 hour. Along with this, we are also going to discuss some recent important judgments, which I'm sure if you stay with me for next 1 hour, that would be very helpful for all the participants, for all the practitioners who are joining this session. Because most of the time, many of the cases which has been passed by Honorable Supreme Court or Honorable Judicial High Courts, they might resolve our issues, our cases very fast, but being unaware about the judgments, we keep fighting the cases, and sometimes we are unable to defend our clients also. So I request that please try to stay and try to grab all the knowledge which we are going to discuss today. I would try my best that each and every participants can learn, and I can learn from all of you. Without taking no more time, I'm starting the today's topic, the writ jurisdiction. May I ask Balkrishna sir whether my PPT is visible and my voice is fine?
Yes, sir, your voice is fine. You may share your screen.
All right, sir. Thank you. Just a moment, sir. Is it fine, sir? Shall I proceed with Balkrishna sir?
Not
I'm just
visible, sir.
It is visible, not visible.
Right.
It's not visible, sir.
All right, sir. All right, just a moment. Yes. Sure, sir. Is it fine, sir? Now,
Yes. Yeah. Perfectly.
sir, now is it visible?
Yes, sir. Yes, it's visible, sir.
It's visible, sir. You can continue.
Am I audible, sir?
Yes. Yes.
You're
Fine.
audible.
Yes, sir. You can proceed.
Balkrishna, sir?
Yes. Yes. You can proceed, sir. You can proceed,
Is it
sir.
audible now? Is it visible
Yes.
now, sir? I'm unable to hear you.
Sir,
Can't
it's
hear you.
visible and audible as well. You're audible as well.
I
You
can't
can
hear you.
continue from here. We are able to hear you, sir.
Sir, you can send me the message, or because um, I'm not getting your reply. Neither. All right, sir. Now I got the message that my PPT is visible and my voice is audible. So without wasting time, let's move forward to our discussion, today's discussion. So we are discussing writ jurisdiction under tax matters with recent important judgments. So the first point is, what is writ jurisdiction? What is writ? Writ is basically a word which means order or direction. And what we file before court we file writ petitions. I got the message again from. Just a moment, let us fix this issue first so that. Thank you, sir. I have got the message that it is visible now. So let's proceed without wasting any time. So what we file before courts are writ petitions, and writ are the synonym of order or direction. So when we file any writ petition before any court, before any high court or supreme court, then the direction given by the courts are said writs. So writs are constitutional remedies designed to look after the violation of fundamental rights enshrined in Part 3 of the Constitution. So whenever there is a violation of fundamental rights which are guaranteed to every citizen of India under Part 3 of Constitution of India, then directly we can approach the high courts or supreme courts. We will discuss later on one by one in what cases we can approach the high courts and or in which case we can approach directly Supreme Court. Writs are written order in the forms mentioned in the Constitution, and it's an order to do a particular thing or stop from doing it. It's very important to know writs not only issued only for doing a certain things, but these are issued when somebody is acting beyond the jurisdiction or anything which are contrary to the fundamental rights. Then to stop somebody, writs are issued. So in both the cases, writs are issued. Under the Indian Constitution, Supreme Court and High Court are empowered to issue writs for the enforcement of fundamental rights. It means only Supreme Court and High Courts are empowered to issue writs. A session court or any other court are not empowered to issue any writ. Like if whether ITAT, whether CSTAT, whether GST appellate tribunal can issue writ. So answer is no. Only constitutional courts can issue the writs, the orders, the directions. Under Article 32, Supreme Court is empowered to issue writs, whereas under Article 2 to 6, High Courts are empowered to issue writs. Supreme Court can issue writs against any person or the government within the territory of India. We all are aware that Supreme Court is the apex court of India, and within the territory of India, Supreme Court can issue any writ against any person or government within the territory of India. And Supreme Court can issue writs to enforce fundamental rights. However, the scope of writs are wider with the high courts in comparison to Supreme Court. The high courts can issue writs even in the cases when there is violation of fundamental right or any other legal right. This is very important to know. Supreme Court can be approached when there is a violation of fundamental rights. However, High Court has been empowered to issue writs when there is violation of any legal right. What are the fundamental rights? Fundamental rights are prescribed under Part 3 of the Constitution of India, whereas High Court can issue the writs in the matter of violation of legal right also. Legal right means any right which is given by any law which are operational in the country. Like in Income Tax Act or in GST Act, if any right is assigned, if any right is given to any person and that right is violated, then High Court can issue the writ petitions, the writs. We can approach the High Court through the writ petitions and High Court can issue the writs. But Supreme Court cannot be approached and Supreme Court cannot issue the writs in those cases. Supreme Court can issue the writs only in the cases when there is violation of fundamental right. What are the fundamental rights? We will discuss it. So this is very important to know that High Court have more jurisdiction, more power so far as writ jurisdictions are concerned. There are 5 types of writ. We shall go through the types of writs quickly because it is very important to understand that in which cases which kind of writ is issued by the court. The first type of writ is habeas corpus. The second is mandamus. Third is prohibition. Fourth is society. And fifth is quo warranto. The meaning of all these, all kinds of writs are habeas corpus is issued when somebody is detained without the authority of law. That can be detained by the police authorities, by other authorities, or by any individual also. So in the cases where somebody is detained without the authority of law, the citizen, the person can approach the court, and court can issue habeas corpus writs and direct the authorities, direct the persons to present to present the person who has been detained in the illegal detention. But this is not very much related in the taxation matters. In some of the cases, this can be relevant in the taxation matters also. Recently, in Gujarat High Court, in one of the landmark judgment, the habeas corpus writ was issued. The GST department, DGJ authorities detained a person for 7 days in a house without producing the person to the concerned authority. So, Honorable Gujarat High Court strictly observed that the person cannot be detained without the authority of law, and as per the constitution, as per the CRPC, criminal procedure code, which has been now renamed Bharatiya Nagrik Suraksha Sanhita, a person cannot be detained more than 24 hours without producing him before the magistrate. So nowadays, habeas corpus can also work in the taxation matters. Mandamus, it is issued when a public official or a person holding a public office has failed to perform his uh, statutory duty. Like we can understand this by an example. Like it is mentioned in the law that if somebody applies for the refund under GST, then authorities are bound to decide the refund applications within 60 days since the date of filing of the application. Likewise, in income tax also there are certain provisions that refund would be issued after filing the income tax return within a certain specified time limit. If the authorities do not process the refund applications within the time bound manner, within the stipulated time, then courts can be approached, and High Court can direct the authorities through a mandamus writ that this should be done within the stipulated time, or they can direct the authorities to do certain act in a certain way. So in those cases, mandamus writ is issued. The third category is prohibition. Prohibition and mandamus is antonym of each other. Prohibition is issued when somebody is doing something which has not attained finality. So before attaining finality, if somebody is doing any act which is not under his jurisdiction, then prohibition writ can be issued by the court, and court can restrict that person, that authority to continue that task. We can read it out. A writ of prohibition is issued to an inferior court. Inferior court means inferior than high court, preventing it from assuming jurisdiction which is not legally vested in it. When a tribunal or lower court acts without or in excess of jurisdiction, this writ can be demanded. It is generally issued before the trial of the case or during pendency of the proceeding, but never after the order is made. This is very important. It can be issued while the process is undergoing, while the case is sub judice, not attained finality. While mandamus commands activity, prohibition commands inactivity. It is available only against the judicial or quasi-judicial authorities, and is not available against public officer. So it means prohibition is issued when any judicial or quasi-judicial authorities are acting beyond their jurisdiction. Either they are not acting in their jurisdiction, or they are acting without their jurisdiction in excess jurisdiction. For example, if a person is residing in Jaipur and his registered place of business is at Jaipur, but an authority of Delhi, the CGST authority or SGST authority of Jaipur, Delhi, has issued a notice to him. Although as per the law, the notice can be issued by the judicial officer. Then the person can approach the courts that without jurisdiction, Delhi authorities has issued a show cause notice to him, and it is not in their jurisdiction to adjudicate the matter, being having no jurisdiction. In those cases, what court can do? Court can issue prohibition writ and restrict the authorities, the quasi-judicial authorities, to continue in that process, to proceed in the matter. Likewise, certiorari and prohibition are likewise, these are akin to each other, but the thin line of difference is there. The difference is certiorari is issued when somebody is acted without jurisdiction and the order has been passed, the procedure has attained finality. So after doing an unlawful act without jurisdiction, if somebody is aggrieved by the action of the authorities, then he can approach the court and court can issue certiorari writ. The last is quo warranto. When somebody issues any take any action without having the authority to do it. If somebody is not empowered to issue any letter and he issues the letter, then under which authority the person is sitting on the public office, that is issued through the quo warranto writ. It is issued by the high courts as well as by the Supreme Court. So all five writs can be issued by Supreme Court and High Court, but Supreme Court can issue the writ only in the cases when there is violation of fundamental rights. However, High Court can issue these writs when there is a violation of fundamental right as well as when there is violation of legal right. In both the cases, the writs can be issued. Now the question comes to our mind that when there is legal right, when there is violation of legal right, like refund is not being processed or any order is passed without jurisdiction, then there is always available the remedy. We can go for the appeal. Then why should we go to the court and why the court would entertain the cases in the cases when we have the alternate remedy available? In which cases we can directly approach the court? These we will discuss in the slides which are coming. So this is a very contentious issue since the beginning, since the constitution was enacted in the India. Whenever any person is aggrieved by any act, by any violation of any legal right or by violation of any fundamental right that has been guaranteed by the Constitution of India, then there are alternate remedies available. He can approach the authorities, the first appellate authority, second appellate authority, tribunal, or lower courts. But everybody wants to go to the high court. Why? Because of instant action. Like if any refund order has been rejected or any refund order has been rejected without any reason, without any valid legal reason, then the option available with the taxpayer is to approach the appellate authority. But it may take 2 years, 3 years, or 1 year, or more than that. And that may be very cumbersome. So, for instant action, for taking the effective action, one can approach the court. But sometimes courts say that you have the alternate remedy available. Why did you come here? Sometimes court entertain the cases. So, what are the situations when the courts entertain the writs? However, in most of the cases, they don't entertain the writ petitions. So this has been decided by Supreme Court in various judgments, but today we are discussing important three judgments of Honorable Supreme Court that are passed, which specifies that in which cases the rule of alternate remedy would not apply, and even existence of alternate remedy would not debar the courts from entertaining a writ petition. So let's discuss that judgment. Honorable Supreme Court of India, in its landmark judgment of Whirlpool Corporation versus Registrar of Trademarks, Mumbai and others, in 1998, laid down the exceptions wherein a writ court would be justified in exercising its jurisdiction despite the availability of an alternate remedy. These principles have been consistently reiterated, followed by Honorable Apex Court. In Radhakrishnan Industries versus State of Himachal Pradesh in 2021, in the matter of taxation, the Supreme Court reiterated the same guidelines. When writ petitions can be entertained, High Court can exercise writ jurisdiction, even the petitioners having the alternate remedy available. In Godrej Sara Limited also, recently in 2023, Supreme Court again reiterated the same guidelines. What are those guidelines? Let's go through the guidelines. There are principally four guidelines, four principles that has been decided. So one by one, we will go through all the guidelines. Honorable Court has categorically held that rule of alternate remedy is not an absolute bar. It means it is not an absolute bar that in every case, if there is alternate remedy available, writ petitions cannot be entertained. So it said that even having the availability of alternate remedy will not an absolute bar. The High Court can entertain the petitions despite there is availability of alternate remedy. And the writ petitions would be maintainable in the following circumstances. So, what are the circumstances when rule of alternate remedy would not apply? First is where the writ petition seeks enforcement of any of the fundamental rights. So, when there is violation of fundamental right, then without following the due process of law, without following the regular process of law, one can approach Supreme Court or High Courts. What are the fundamental principles? What are the fundamental rights? Under Constitution, from Article 14 to 32, fundamental rights are prescribed. Their articles include right to equality, right to freedom, right to carry on business or profession, right to life, right to practice any religion, and statutory remedy. So these are the fundamental principles which govern the fundamental rights. So how we can fit all these situations in the taxation cases? Like if somebody is working without jurisdiction, if any if somebody if authority has taken any action which is depriving our fundamental right, which has made our life running of our life is impossible. If somebody has cancelled a registration, so there is fundamental right of carry on business or profession. So in case when there is violation of fundamental right, we are unable to run our business, then we can directly approach the court. We can have an example like in the case when the authority has cancelled a registration without any adequate reason, without any reason provided under the law, then this is a fundamental violation of fundamental right. So in those cases, if we approach the appellate authority, that may take 1 year or 2 years. But this is a fundamental violation of fundamental right. So we can directly approach the court. Other situations can be like a judgment. I'm referring to Sangam Scooter Center that can be useful for all the participants. Like nowadays, many show cause notices have been issued based on the third party statements. And they, in the show cause notices, the department authorities raise the demand that because Mr. X has said that goods were not delivered to you and you dealt with only goods less invoices, you only procured the invoices without receiving any goods, then you should be liable for the demand of tax, interest, and penalty. And those show cause notices were issued even without supplying the statements made by the third party. Like Mr. X has said that Mr. A has received only invoices without any goods. So, based on the statement of Mr. X, Mr. A was asked and the demand was proposed against Mr. A that so and so demand should not be, why that so and so demand should not be raised against you. In those cases, what happened in a case that without giving the statement, copy of the statement made by Mr. X, the demand was confirmed against Mr. A. So this is relied upon documents. This is a fundamental principle that if somebody is being prosecuted or somebody is alleged to have committed any offense, then he should be supplied the basis, the material based on which the department has initiated the action against him. So at least in the instant case, the statement of Mr. X should have been supplied to Mr. A. But without supplying the relied upon documents, without supplying the statements, the demand was confirmed against the taxpayer. So what the taxpayer did, the Sangam Scooter Center approached Honorable Court, and without filing the appeal, Honorable Court was persuaded that, sir, without providing us relied upon documents, the demand has been confirmed against me. Even I am unaware that what was said by the third party and on what basis the demand was confirmed against me. The Honorable Court, taking the cognizance of the issue, directed the authority to first supply the relied upon documents and then again decide the matter. And the demand order was set aside. So I was part of this judgment. So it was issued. We filed a writ petition, And the judgment was issued that this is in violation of the fundamental right. Non-supply of relied upon documents is a violation of fundamental right. It breaches the right to life, right to carry on business or profession, and therefore we set aside the order. In another case, the statement of third party was made part of the show cause notice. But when the petitioner requested the department to provide opportunity of cross examination to ask the questions with the person who stated against him, who deposed against him, the department failed to give any heed, and without giving any cross examination of the person who stated against the petitioner, the demand was confirmed against the taxpayer. So this was also in violation of the fundamental right. If one is alleged for not paying of the tax, then it is his right to ask the authorities to present the person and to cross-examine him that why, how you said this, did you say this, or if you said this, then on what basis did you say this? So the department proceeded without providing opportunity of cross-examination, and the petitioner approached the High Court, and High Court stayed the demand based on the fact that not providing opportunity of cross-examination is violation of fundamental right, and demand was stayed. So we should be aware, we should take the knowledge of this situation, that in cases where there is fundamental rights violation, without going to the appellate remedy, without going for the appellate remedy, we can directly approach the court. The benefits are, we need not to deposit any pre-deposit amount that is required to be deposited when we approach the first appellate authority. There might take some more time in the regular process in the appeal proceedings, and we need instant action, then we can directly approach the court. And if we convince the court, then court can take the decision. Court can grant us the relief. The second exception to the rule of alternate remedy means having the alternate remedy would not debar the exercise of writ jurisdiction. The second principle laid down by Supreme Court was when there has been a violation of the principles of natural justice. This is very common, and you would all agree who are dealing in GST that in many cases, without affording us opportunity of being heard, without giving us chance to argue the matter, to defend the case, the demand is raised by the authorities. So this is principles of natural justice. And when there is principles of natural justice, then directly honorable courts can be approached. What is the principles of natural justice? First, we need to understand this. Principles of natural justice provides three principles. Three elements are there of principles of natural justice. First element is a prosecutor cannot be a judge. That means a person who is interested in a matter cannot be the adjudicating authority, cannot make the adjudication order, and who cannot, like we can take the example in many of the cases what is going on, the authorities who conducted the search, who conducted the inspection, they themselves are issuing show cause notices. That is true, that's not a problem. But when they are issuing orders also, after issuing the show cause notices, after conducting the search against a taxpayer, then it is considered that that person has the interest in that matter. When somebody himself investigated the matter, then it is not practicable to expect from that person that he will impart the justice, he will without any biasness decide the case, because he's interested in his matter, he has himself conducted the investigation. So it is very difficult for him to not accept the evidences, the proceedings which he himself carried out. So in those cases, this can be excised. The second element of principles of natural justice is one should be heard before taking any adverse decision against him. It is also said one should not be condemned unheard. So it is very much clear that before taking any action against any person, he should be given personal hearing. He should be invited to state his matter, to explain his matter orally to the authority. So we could see that in many cases, without affording us opportunity of being heard, the cases are being decided, the orders are being passed. So in those cases, we can directly approach the court. The third principle, the third element of natural justice is the order should be reasoned. That means whatever allegation were raised in the show cause notices and we have filed the reply, when without considering our reply, arbitrary, on the basis of arbitrariness, without giving due appreciation to our submissions, when any order is passed and that order is passed against the taxpayer, against a person, that is also under the ambit of natural justice. So in all those cases, in all the cases which are falling under the natural justice, and there is a violation of natural justice, the writ jurisdiction can be excised. We can see some judgments which can be very much relevant for us, and we can have more understanding that in what situations we can go directly to the court. In this case, what happened? Kirti Engineering, the authority issued a notice to the taxpayer, and they simply mentioned that you have committed fraud. What kind of fraud he committed? What were the reasons? What were the ingredients of allegation? Nothing was said in the show cause notice, and his registration was cancelled. He approached the court, sir. The show cause notice is itself vague, and it is very impossible to understand for a prudent man that on what basis the allegation of fraud was leveled against me. And without any reasons, the order was issued against me and my registration was cancelled. So this is violation of principles of natural justice as well as principles of fundamental rights, because my right to carry on business or profession has been badly affected by the action of the department. The High Court intervened in that matter and decided that the registration should be revoked without any delay, because there was no clear finding in the order. The order was unreasoned, non-speaking order was passed, and therefore this cannot be sustained. In another case, in Hindustan Construction Company case, without providing opportunity of being heard, and the sketchy order was passed without any some sufficient reasons that why the demand should be confirmed against the taxpayer, the High Court set aside that order. In Maple Luxury Homes matter, I argued this matter. In this case, what happened? A show cause notice was issued, and the ground which was mentioned in the show cause notice was totally different. We replied to the show cause notice and we satisfied the authority that the allegation leveled in the show cause notice is not valid and this is contrary to the law. Then what happened? The authority passed the order entirely on the new ground that was not part of the show cause notice. So when we approached the honorable court, we requested them, we argued that, sir, we were not given opportunity of being heard on the ground which was made the basis of order in original. And on that basis, honorable court set aside the order and granted relief to the taxpayer. So this can be seen as the principles of natural justice. And when there is a violation of principles of natural justice, directly High Court can be approached. Sometimes we feel that if we file the appeal, even then department is going to decide against us. Sometimes we feel that we want to go for the appeal, but 10% amount is so huge and we are unable to approach the court, we are unable to deposit that amount. When there is a fundamental rights violation, in all those cases, without going to the regular remedy, we can directly approach the court. The other grounds are when the impugned order proceedings are wholly without jurisdiction. We have discussed the Delhi authority has issued the show cause notice to a person who is residing at Jaipur. Delhi authority has no jurisdiction to that person, but he issued the show cause notice. So without replying to the notice, directly a person can approach the court. Sir, this is without jurisdiction. The law doesn't provide the jurisdiction to the concerned officer who issued this show cause notice and who proceeded and who has taken this proceedings. So court can directly be approached and we can get the relief by the court. We can refer this case in the case of Joint Commission Officer Delhi India Limited. Karnataka High Court has decided that notice issued under Section 148 of the Income Tax Act that was issued without jurisdiction. So court held that without jurisdiction, a person cannot issue the notice, and if it is issued, this would be without the jurisdiction. And based on this, the notice was set aside, that was quashed, and the taxpayer was granted relief. So this is the importance of jurisdiction of the, we should know the jurisdiction of the taxpayer, and when there is lack of jurisdiction, we can get the relief directly from the courts, high courts. The last but not the least, where the virus of an act is salient, then we can approach directly to the honorable courts. What does it mean? It means if a circular is issued by the department, by the CBIC or by CBDT, that circular we feel that that is contrary to the provisions of law. or any provision of section, any section of the act that is contrary to the Constitution of India, or any rule is contrary to the parent legislation, that is act, or any notification is issued without any jurisdiction or without any power granted to the authorities by the legislatures. In all those cases where we feel that any law, any instruction, any circular is without the jurisdiction, is beyond the parent legislation, then directly we can approach the court, and courts has the power to decide to adjust the matters, to adjust the circulars, to adjust the rule or section ultra vires. Ultra vires means without jurisdiction. We can have seen many cases like recently the rule 96 sub rule 10 of the CGST Act was declared ultra vires by the court, and Supreme Court has decided, Gujarat High Court has decided that this rule is not as per the Act, therefore it cannot survive. In many other cases also, let's discuss one important case which can be relevant for all of us. Honorable Guwahati High Court, in the matter of Barka Taki Print and Media Services, held that the notification issued by CBIC, by the Government of India, sorry, extending the timeline to issue the order for financial year 18, 19, 19, 20, 2021 beyond the due date prescribed under the law because of coronavirus. That was the timeline to pass the orders by the GST authorities were extended by the government based on the fact that due to coronavirus, they could not complete their processes, they could not issue the show cause notices within the time. So this notification was challenged by the petitioner in the Guwahati High Court, and Guwahati High Court said that this notification was issued without taking the recommendation of the GST Council. However, it is mandatory for GST law to first have the recommendation of the GST Council meeting. When there is a recommendation of GST Council meeting, then only a notification can be issued. Uh, Based on this, the notification was declared ultra virus, and the persons who approached the court got the complete relief without going into merits. So, in this case, if he would have approached the appellate authority, the appellate authorities were bound to follow the notification issued by the Government of India. He would not have got the relief. But he approached directly to the court, and he convinced the court, sir, this notification is invalid, ultra virus, and this is beyond the law. And based on this, the court granted relief to him. So, meaning thereby is whenever there is law is challenged, when there is provision of law is challenged, we can directly approach the court, and court would entertain the petitions and decide the issue. So these four are the situations when directly writ petitions can be filed to the court, and court would, it is not mandatory for the court to entertain the petitions in every case, but court has the guideline to entertain these petitions if these four ingredients are satisfied. Now we discuss some important judgments, and before going to the judgments, we shall first discuss some important articles which, having the practice of taxation also, we should have the knowledge. We being chartered accountant, we are practicing in compliance as well as in litigation work, and we don't read much about the Constitution of India. But being a chartered accountant also, being a tax practitioner, we must be aware about the fundamental articles which are related to taxation. Like Article 32 is the jurisdiction of Supreme Court to issue the writs. Article 226, which we have discussed, the jurisdiction of High Courts to issue the writs, that we have discussed 5 kinds of writ, and that can be issued for fundamental rights violation or for the violation of legal right. Article 227, this is a supervisory jurisdiction. The respective High Courts having the jurisdiction in the territory of the state, they have the jurisdiction, they have the superintendence over all the courts, and when somebody is not acting in the proper way, then honorable courts can be approached. This is provided under Article 227. This is very much important. Article 265, this says that taxes not to be imposed save by authority of law. That means no tax shall be levied or collected except by authority of law. Whenever any tax is collected or levied against any person, then sometimes he doesn't find any provision in the law that under which law I can challenge it, how I can challenge this demand because GST Act or Income Tax Act is silent for this issue. Then he can refer Article 265, which says that without the authority of law, when there is nothing mentioned in the law, the taxes cannot be collected. So in those cases, like if tax department has recovered the amount from us, if we fail to file the refund application within 2 years, which is prescribed under GST law. So after 2 years, if we approach the department for the refund, the department would say that you are not entitled for the refund because 2 years has been already lapsed and you couldn't come within the time limit. So we can't grant you the refund. Now we can refer to Article 265. 265 says that when there is no authority of law, then tax cannot be collected or levied. So if the transactions are not supplied and they are not liable for the GST, in those cases, even there is no timeline, we are approaching the department beyond the timeline. Honorable courts has decided in number of cases in the pre-GST regime, in excise service tax regime, in income tax regime, that without the authority of law, tax cannot be kept by the department, and that needs to be refunded to the taxpayers. So this is the importance of Article 265, that without the authority of law, no tax can be collected or levied. Then persons not to be deprived of property shall by authority of law. No person shall be deprived of his property except by authority of law. Likewise, 265, when department is, recovering the amount, we are not agreed that departmental action is as per the law, but they have adopted some coercive measures, and during the search they recovered the amount. They insisted us to recover the amount, and that was deposited by us. But later on we realized that this tax was not leviable to tax, and that was unlawfully recovered by the department. So we can approach the court, we can take the reference of Article 300A, even that was deposited by our own voluntary or own consent. We filed the DRC3 application or we deposited the tax, but that was not actually as per the law. So we can approach the court. So there is no authority of law to recover the amount without any basis, and we cannot be deprived of our property, that is cash, that is the fund. Therefore, the amount should be refunded to us. So this is Article 300A. Likewise, Article 19(1)(g) says all citizens shall have right to practice any profession or to carry on any occupation, trade, or business. So, in one of the cases, I would love to throw the light on that case also. Registration of a person was cancelled. Then he requested for the fresh registration. The fresh registration was also cancelled because of a circular which says that if a person's registration is cancelled due so moto by the department, then if we approach again the department for the fresh registration, then there might be some parameters based on that the registration can be cancelled. So again, fresh registration was also cancelled. We approached Honorable Court, and Honorable Rajasthan High Court decided that you cannot deprive any person to practice his business, to carry on his business for the indefinite period. Once you have cancelled his registration, he has the right to carry on the business because it has been guaranteed under Article 19(1)(g) that he will carry on the business. The court directed the authority to grant the registration within 3 days, and registration was granted the taxpayer within 3 days, and he was able to run the business. Likewise, Article 14, right to equality. If a department is behaving, if the taxpayer is not being treated equally, if some person is giving better treatment or favorable treatment, however the other person is being deprived of that treatment, then Article 14 guarantees us that one should be treated equally in the similar situations. So if there is violation of Article 14, we can directly approach the court. So these are the main points of main articles of Constitution of India. Now in next 10 minutes we are running, it is already 5:49 and we have 11 minutes more. So I will try to summarize the judicial precedents which are very important for all of us to know. These judgments have attained finality, and Article 141 of the Constitution of India says that when any judgment has been passed by Supreme Court, that becomes law of land. And all the authorities across the country are duty bound to follow that guideline, that judgment. So judgments which we are discussing in the next slides, most of the judgments have been attained finality, that has been decided by Supreme Court, and referring these judgments, placing reliance on these judgments, we can get the relief in our matters also. You might feel that many of the cases you are arguing with, you are fighting with, that has already been decided by the court, and we can get the relief on those matters also. So first judgment we are referring is, this is very, very important. The judgment is CBIC versus Aberdar Technology Private Limited. Supreme Court, what happened? In many of the cases, while filing the returns under GST, some errors were occurred. Like instead of IGST, we paid CGST as GST, or taking the ITC of CGST as GST was our will, but we failed to take that ITC. We reported the ITC under IGST column. Or in GSTR 9, we committed some errors. There was some wrong reporting, or we have placed one more zero. So these kind of errors we committed without any ill intention, without any intention to evade tax. So what happened in this matter? The certain time limit is prescribed under the law until the time we can amend the return, but thereafter we cannot amend the return. So in this matter, the petitioner could not amend the return within the stipulated time of 30th of November following the end of financial year. Based on the some reporting error, the department raised the demand. He approached the court, sir, there is no other mechanism provided under the law beyond the timeline. If some bona fide errors were committed by me, therefore I request that I may kindly be granted chance to amend the return, to amend the reporting which I have committed some error, though there is no revenue effect, there is no revenue loss, no intention to evade, but some bona fide errors were committed. I want to rectify that error. So Honorable High Court decided that yes, there should be some process inbuilt in the law, that when somebody is committed some bona fide error, he should be given chance to rectify that error. And High Court allowed the person to rectify the error. Aggrieved by the judgment, the board CBIC approached Honorable Supreme Court, and Honorable Supreme Court affirmed the judgment of High Court and decided that even after the expiration of the prescribed time limit under the law, if there is bona fide error committed by any taxpayer, he should be given chance to amend the return. Honorable Court also directed CBIC to lay down a guideline in the situations where bona fide errors were committed by the taxpayer, that they can rectify their errors. So this is a very important judgment. Whenever the department issues the notices or confirms the demand against a taxpayer, he can ask the department that based on this judgment, we also request to provide us the option to rectify my error which I committed in the return. And if the department doesn't reply to us, we can directly go to the court. I would also, I will please mind all of you, before approaching any court, we should first try to write a letter to the authorities seeking what relief we want. When they are unable to provide us relief within the, an appropriate time, we can refer 7 days or 10 days or 15 days, then we can approach the court. Otherwise, court would say, have you exhausted the remedy available? Have you tried to get your remedy resolved? If you have not tried, then court would say that first you file the representation to the authorities, then you come to us. So in this case, whenever there is a mistake apparent on record, there is bona fide error while filing the returns, we can directly go to the court after filing the representation to the department, and this judgment can be referred. Now the next judgment is, this is also very common practice by the department, that when any stock is found, excess stock is found, when any, the stock which is in the books are not found at the premises of the taxpayer, then department is seizing the stocks, and after seizing the stocks, they are issuing the show cause notices. So in this case, Vijay Trading Company versus Additional Commissioner, Allahabad High Court decided that you cannot seize the goods. You can start the adjudication proceedings, you can issue the show cause notice demanding the GST on the excess stock you found or the lesser stock you found. You can take the action of the demanding of tax, interest, or penalty, but you cannot seize the goods. But in many of the cases, even today also, one of my client was aggrieved by this practice of the department. The department seized the stock because of lack of knowledge of the judgment. So what we can do, we can ask the department now, ki please release this stock because this is against the judgment affirmed by Supreme Court and this has become law of land. Now you cannot seize the goods anymore. If the department doesn't do anything and doesn't act as per the judgment, we can directly approach the court that even after sending the representation, even after there is clear-cut judgment of Supreme Court, the department is not taking the action as per the law. So this is very important. We can refer this also. In one important judgment, Gemini Edible and Fats India Limited, it was an interesting case. The inverted duty structure provides that if inward supplies are having the more GST rate in comparison to the outward supply, then the taxpayer can seek the refund of unutilized ITC. So there are certain items, certain articles which are restricted for the inverted duty structure. In the list of restricted item, one more article, edible oil, was also put into place via notification number 9/22. It was issued on 13th of July and it was effective from 18th of July 2022. So what happened after this notification? A circular came to be issued by the CBIC, and circular said that the taxpayer cannot get the refund if he files the application after a specified date. So the taxpayer who was eligible for the refund up to 18th of July 2022, if he doesn't file the application within a day or two, then he was denied the refund based on the fact that, based on the circular, that after the cutoff date, nobody can file the refund. So this was the retrospective curtailment of the rights of a taxpayer, retrospective amendment of the right of the taxpayer that was adverse to the taxpayer. So the taxpayer approached the court and he prayed, sir, without authority of law, when we sold the goods, when we dealt in the goods, we were eligible for the refund. And by a circular, the CBIC is trying to curtail our right, is trying to restrict our refund application from a certain cutoff date. This cannot happen because Article 20, sub-article 1 says that nobody can be prosecuted for any offense that was not an offense while it was committed. So likewise, we were eligible for the refund, but by a circular, it was said that from today, you would not be eligible for the refund if you didn't file the application. Although in the law, we had the time of 2 years to file the refund application. So High Court strike down the circular. It was dictated ultra vires, and then Supreme Court in this case affirmed the judgment passed by Honorable High Court. Against the judgment of Honorable High Court, department went to the Supreme Court and Supreme Court affirmed the judgment in favor of the taxpayer. So this is also a very important judgment. Blocking of ITC, this is also a very common malpractice by the department that in one or other cases, the department is blocking the electronic credit ledger of the taxpayer without providing hearing to him. So Supreme Court has affirmed the judgment of Karnataka High Court that says that before blocking e-credit ledger of a taxpayer, he should be given hearing. He should be given chance to explain his case that why this blocking of the ITC should not be done. So based on this, when the ITC was blocked of taxpayer, he approached the court, Karnataka High Court. Karnataka High Court ruled in the favor of taxpayer. Then department went to the Supreme Court and Supreme Court finally decided in the favor of the taxpayer that pre-decisional hearing is must before blocking the ITC of a taxpayer. Likewise, this we have almost discussed these issues. This is also a very common issue that I will take two minutes more, then we will try to wrap up our submissions our derivation today. This is also very important that the timeline of 3 months plus 1 month has been expired and we couldn't file the appeal. So in those cases, there are multiple judgments which says that when the orders were uploaded under additional notices tab, not under the main orders or notices tab, then that cannot be considered as proper service of notice order. And in those cases, the department would again give chance to the taxpayer to file the appeal. So these are judgments, these are very important judgments, wherein we can refer that orders were uploaded under additional tabs and therefore it was not the proper service of the correspondence, and the communication date should be reckoned from the date when we came to know about the impugned order, and then we can file the appeal within the timeline. Otherwise, also the timeline to prefer the appeal starts from the date of communication of the order, not from the date of the uploading of the order. So if we can prove that date of communication of the order was so and so, then we can file the appeal within the 3 months from the date it was came to the notice of the taxpayer. So in every case, whenever we are filing, whether it is actually communicated to the taxpayer within 3 months or not, we should always try to make the date of communication which falls within the limitation. This is very, very important. Likewise, Income Tax Department failed to decide the revision application filed by the taxpayer after a long time. So taxpayer approached High Court and High Court directed CBDT to decide the application within 8 weeks. We have already discussed Article 227, that is supervisory jurisdiction of the court. So in this case also, taking the reference from supervisory jurisdiction, Honorable Court directed the authority CBDT to decide the revisional application within the time. This is one more very important judgment. This is the last judgment which we are discussing today, because Safari Retreat we all are aware about that ITC on immovable property is allowed if we pass the functionality test, and as per the functionality test, low building the ITC on immovable property can be allowed. But that has been again court has the legislature has inserted a new proviso and amended the provision based on which the Supreme Court has decided the issue. Let's see what Supreme Court does again on that issue. But so far, as per the judgment of Supreme Court, we are eligible for the ITC. However, as per the retrospective amendment by government, we are ineligible for the ITC. The last judgment, which is also very, very important, there are thousands of notices across the country based on the non-payment of GST on royalty amount under reverse charge mechanism. So this judgment is very important. It has been held in this judgment that the royalty amount, if was liable to pay before 25th of July 2024, and based on the royalty amount, the department proposed the demand of GST or any other demand of tax, then for the amount of tax that was payable up to 25th of July 2024, there will be no levy of interest and penalty. In all those cases where demand was raised on royalty amount, non-payment of GST on royalty amount, we can refer this judgment. This has attained finality. Mineral Area Development Authority MADA versus Steel Authority of India Limited, SEL. In this judgment, it has been held that before 25th of July 2024, there will be no levy of interest and penalty on the GST amount paid under royalty amount. So if we have not paid the amount, we can pay the tax amount and we can get the relief immunity from interest and penalty. With this, we have the key takeaways that writ courts can be approached when there are 4 ingredients, 4 the elements are there. Principles of natural fundamental rights violation, principles of natural justice, access without jurisdiction, or then when virus is challenged. But in every case, we cannot approach. We have to see that whether these parameters are fulfilled, we are eligible, we are falling under these parameters, then we can approach the court and we can get the good relief from the courts. With this, I end my PPT, my deliberation. I am very much thankful to all the participants who are participating in this webinar. And I am again thankful, I express my gratitude to Chairman C. Satish Gupta sir, Vice Chairman sir, Moderator, and all the technical team, Akshat sir and all, who arranged this webinar and without any hurdle, without any problem. And we successfully completed this topic today. Thank you so much once again.
Thank you, sir, for such an insightful session. Now, we will begin our question and answer session. So I request the audience, please type your questions in the chat. We will
Yes,
address
sir.
them one by one. Am I not audible to you?
Balakrishna sir, now you please take on.
Okay. 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 Thank you all. On behalf of everyone
Thank
present
you.
here, I extend my heartfelt thanks to our esteemed speaker for such an insightful session on the topic writ jurisdiction under tax matters with recent important judgment. Your detailed explanations and references to the latest judgment have truly enhanced our understanding of this complex subject. We deeply appreciate the time, effort, and clarity with which you shared your expertise. Thank you, sir. Thank you once again.
Thank you so much.
Thank you, audience.
Thank you, all of you.
Thank you.